Now, along the way, the dip buyers who traded out when stocks jumped started losing big money. They were maybe doing it in call options. Maybe they were buying stocks with borrowed money margin. Their ranks have grown ever thinner as the losses mounted. And they came to realize that they weren't buying a dip. They were buying the veritable Grand Canyon that drops. They were buying a fall from the north face of Everest. The other two groups, those who love the cadence of beat and raise, beat and raise, beat and raise, and those who love the momentum of either the stocks or the underlying business, they've been hanging on for dear life. As inflation continued to erode the faith in growth stocks, especially unprofitable growth stocks with high price to sales multiples, because there are no earnings. Then yesterday came. Yesterday was the Waterloo, my friends. True Waterloo watershed. First, Jay Powell, the head of the Federal Reserve, recognized that inflation is accelerating. Said he would start trying to contain it by raising interest rates, maybe at 25 basis point. Hey, maybe more. Then Okta and Snowflake reported after the close. Okta, which does identity and access management, in particular, kind of really good cybersecurity, reported better than expected revenues and a smaller than expected loss for the fourth quarter. Bingo, right? No issues. Then the company also issued forward guidance that included, again, better than expected sales, but this time, much bigger than expected losses. Now, that might have been overlooked in the pre-inflation era, but it was unforgivable in this new world, and the stock cascaded immediately. And believe me, it is not done cascading. Snowflake reported amazing sales, smaller losses. So far, so good. But then forecasted a slowdown in its growth rate. Unacceptable. Slowdown in the growth rate. Ouch. That's a nightmare for those who live by the rules of momentum, especially in an inflationary environment. Now, given that there are so many momentum camp followers and so many ETFs centered on the businesses that are covered by this, right? These two names did literally bring down the proverbial houses of both groups. Both of them got crushed by these two stocks. Next thing you know, you've got the analysts shockingly cutting price targets galore. And there's a tsunami of selling. Even as I think that Snowflake will be able to come out of this just fine because CEO Frank Slootman, I believe, was merely being conservative in his forecast. But why didn't that matter? Well, remember what I said. Many people who own Snowflake only owned it because of the chart. They were willing to pay 100 times sales for it at one point. Many of these people didn't even know what Snowflake did. I mean, maybe they thought it was like a meteorological thing. So what happens now? The momentum is gone. The charts are broken. The dip is a World War I trench, and the thrill is gone. I think that many of these stocks, many of the people who are, I think many of the stocks are done. I didn't want to say that, but I do. And the people who own them, they've lost too much money. A lot of them are doing what I was afraid of back in November. They're going back into CDs, money market funds, trying to hide in cryptocurrencies. At least it was more fun when they were losing money in Dogecoin. Others are licking their wounds and waiting for better times that may now come, may not. So others, like Kathy Wood, simply don't care because they're so dogmatic. Now, you know I believe there's always a bull market somewhere. And we have one now in natural resources, with another one maybe coming in the staples and the healthcares as the feds hit the brake, and maybe they're hitting the brakes too hard. But high-growth tech, I'm always going to have some, but wow, it's tough sledding. The bottom line is that the era of beat and raise and buy no matter what is over, well, let's just say it's done. It's over for the formerly high-flying growth stocks. There's still plenty of other stocks out there. But if you're still betting on these bouncing back, well, let's just say, why don't you pull in your horns? Because I don't think it's going to work.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.